Hi friends, very good evening all of you. Welcome back to CAP classes. So today we are going to start with one of the most important areas of auditing, audit evidence. Irrespective of the course, whatever the course you are studying, irrespective of the level, whether you are in intermediate level or final level, this particular area, audit evidence, in my opinion, is the most important thing. Not only from exam point of view, it is high weightage. Not only from knowledge point of view, it is very important, but also from practice point of view. When you are working as an intern or as an articled assistant, or when you are working as a team member of any engagement, or even if you are a qualified chartered accountant, whatever the stage of either academics or whatever the stage of your practice is, this particular topic is going to be the lifeblood, or you can say this is the heart of the whole auditing. Okay, so today let us start with audit evidence. So one student is saying that it is not audible. Guys, can you please confirm whether I am audible or no? Ajay, are you able to hear me? Okay, very good. So remaining students are saying audible. So Madhumita, can you please check your settings? If there is something wrong in your device, you can just, exit the meeting and then you can come back. You can leave the meeting and come back. So probably that might help. Okay. So guys, if you look at this, this is our beautiful ICI study material. Okay. This is our ICAI study material. And look at the number of pages. It will give you a panic attack. Okay. If you look at the number of pages, it will give you a panic attack. 142 pages. But don't worry, I'll take you through. Don't worry, I'll take you through. Okay. So this is chapter 4, audit evidence. Now, let us not go into what is this, learning outcomes and all that you can read later. And then chapter overview, they said audit evidence by using the work of internal auditors, which is a standard 610, by audit sampling, which is also a standard, then special considerations of selected items, external confirmations, opening balances, related party transactions, analytical procedures. Guys, all these are standards. Each and every line is a standard. That means in this particular chapter, we are going to look at these many standards on audit. Okay, we'll see. Then they have given audit sampling. Why they have given audit sampling here? God only knows. It is not the relevant area where we have to discuss about audit sampling. Skip it. Analytical procedures, skip it. We'll come back to all these things. Now, they have given one case study as not even a case study. It is a scenario. It is a scenario. So they are trying to explain the importance of audit evidence, and then one diagram is given. Audit evidence, what is the meaning of audit evidence? What is the relevance of audit evidence? Reliability of audit evidence? Sufficiency and appropriateness of audit evidence? What are various sources? What are various audit procedures? How do we evaluate audit evidence? This is the scope of the chapter. That means in this chapter, we are going to learn all these things. In this chapter, we are going to learn all these things. Now let us see. First, let us go to the definition of audit. This is the definition of audit. So look here what they are saying. Audit evidence is the information used by the auditor in arriving at conclusions on which the auditor's opinion is based. Okay. It includes both information contained in the accounting records underlying the financial statements and other information. Okay. Now, let us discuss what this is. So let me give you an example. You are conducting audit of financial. So I think there is some issue. I do not know what it is. Sorry for that. Okay. Are we connected? Once again, can you guys confirm? Are you able to see me? Hello. Ajay, are you able to see me? Yes. Okay. Very good. Very good. Okay. I'm so sorry. There seems some technical glitch. I do not know. So now look here. You are conducting audit of financial statements of, say, Mr. Ajay. It could be a company, it could be an individual, it could be a proprietor firm, doesn't matter. You are conducting audit of one entity or one individual. So in his balance sheet, in the balance sheet of the client, so there is one liability side and there is one asset side. Under assets, he has shown fixed deposit with State Bank of India. Fixed deposit with State Bank of India. So this is what he has shown, 5 lakhs. Okay, now, if you are signing the financial statements of Mr. Ajay, if you are signing the audit report of Mr. Ajay, what is the opinion you are giving? You are giving that the financial statements at the end of audit, okay, you will give an audit report, an audit opinion through your audit report that mentions that the financial statements of Mr. Ajay are showing true and fair view. Okay, this is what you are going to give. Now, how can I simply give true and fair financial statements report to Ajay? That means if I'm giving this, don't you think I'll have to verify all the assets, all the liabilities, all the revenue, all the expenses? So unless I verify P&L balance sheet, I cannot give this opinion stating that the balance sheet of Ajay is showing true and fair view. Balance sheet of Ajay is showing true and fair financial position as on 31st March 2025. How can I say that? To do that, I need to verify this. So I need to verify this. Now, how do we verify that fixed deposit? So if you understand the sequence, what is happening, if you understand the sequence, you have some information and you are obtaining audit evidence, which will help you in giving opinion. So this is stage 1. This is stage 2. This is stage 3. So look at this. There are 3 stages. There is some information. What is the information? Here there is financial information, fixed deposit with State Bank of India. This financial information is coming out of the financial statements of the entity. So this is step 1. There is some information. Step 2. Now, closing my eyes, how can I assume that, maybe Ajay said he has fixed deposit 5 lakhs. Closing my eyes, how can I assume that, okay, probably maybe he is having a deposit of 5 lakhs? No, you have to verify, your auditor. You have to verify. So before I express an opinion on the financial statements of Ajay, I want to obtain audit evidence whether this fixed deposit 5 lakh rupees is a genuine entry or no. Is a genuine account balance or no? Is a genuine asset or no? Now, how do we verify that fixed deposit? How do we verify that fixed deposit? One, you inquire, call the accounts manager and inquire if they really have that fixed deposit. Okay, so if you observe, we are using one technique called inquiry. You are inquiring. Dear account manager, your company said that you have a fixed deposit of 5 lakh. Can you please tell me, do you really have a fixed deposit of 5 lakh? Yes, sir. Can you confirm with which bank? He said, sir, State Bank of India. You have obtained some information. You have obtained some information. So this is 1. 2. You can check the bank statement. You can check the bank statement if there is a debit entry from bank account to credit the same to a fixed deposit account. So how do you open a fixed deposit? First, you need to give 5 lakh rupees so that bank will give you fixed deposit. Or even if you are using net banking, nowadays in net banking, there is something called ETDS. Sorry, not TDS. EFD. ETD they call term deposit, or EFD they call. Okay, so when you are opening using your net banking, you said you want 5 lakh rupees fixed deposit. So obviously that money will be deducted from your savings account or current account, and that will be credited to fixed deposit account. Okay, so what will be the journal entry? The journal entry will be fixed deposit account debit to savings bank account. 5 lakhs, 5 lakhs. So the amount must be debited from the bank account and credited to deposit account. So you can verify this. This is verifying documentation, documentary evidence, documentary verification. 3, verify fixed deposit receipt given by bank. Verify fixed deposit receipt given by bank. This is also documentary verification. This is also documentary verification. Now, 4, you can obtain a confirmation letter from banker. So banker will give on a letterhead. On a letterhead, banker will say that, yes, this particular entity is having this much of amount in our fixed deposit account. And the banker will put a stamp, bank manager will sign, and then he will give it to you. This is called external confirmation. It's called external confirmation. So now how many ways are there to verify one fixed deposit? Pavan sir, should I use either technique 1 or technique 2 or technique 3 or technique 4 or a combination of 1, 2, 3, 4 or all of them? That depends on the materiality of item. If the item is petty, maybe you will follow one approach and you'll say, fixed deposit is there. If the item is really material, you might prefer doing all the 4. So basically what you are doing here, you are trying to obtain some information from the accounting records or through some other techniques to confirm that the financial statements are showing true and fair view. Now let us go back. Audit evidence. What is audit evidence? It is the information. What is audit evidence? Look here. It is the information. Audit evidence is the information used by the auditor in arriving conclusions on which the audit report is based on. So you are giving opinion. Opinion is nothing but your report. So before giving that, you are obtaining evidence. Pavan sir, what it could be? It could be from accounting records. It could be financial statements or accounting records underlying financial statements, or it could be other information also. So this is the definition as per Standard on Audit 500. Now remember one thing, SCA 500 is the series of standards that comprises all the types of audit evidence standards. So look here. This is the list of standards issued by ICAI, and it contains, certain charts. Okay. So we'll use ICAI study material, we use ICAI revision capsules, we use standards and auditing charts to learn different things. Okay. So look here. Can you see SCA 500 to 599? So the series 5 is audit evidence. And there are so many standards there. It is not one standard. There is 500, there is 501, there is 510, 520, 530, 540, 550, 560, 570, 580. So the whole series 500 deals with audit evidence. And here you will also read series 6, because series 6 also, though you are using the work of others, that also will give you certain audit evidence. So this is the meaning of audit evidence. And then they have given illustration 1, which has no that level of significance, but as a matter of formality, we will read it and we will jump. The auditor of JPJ Limited explained to the audit team members about the relationship between audit evidence and opinion. Explain what relationship exists between audit evidence and opinion. Simple. Your opinion is based on the evidence. Your opinion is based on the evidence. If the evidence is strong, you will give one opinion. If the evidence is weak, you will give one opinion. If the evidence is not available, you will give one opinion. If the evidence cannot be obtained, you will give one opinion. So we have, do you remember in audit reports, there are 4 different types of opinions. Clean report, unmodified opinion, then qualified opinion, adverse opinion, disclaimer of opinion. Pavan sir, I am unable to obtain audit evidence. Normally disclaimer of opinion. Pavan sir, I got the evidence, but it is contradicting with the financial statements. Then you'll go with either qualified report or adverse report. Pavan sir, I obtained audit evidence that the financial statements are not showing true and fair view. Adverse report. Pavan sir, I have obtained evidence. Everything is clear, Pavan sir. Clean report. So simple. What is the conclusion from this particular discussion? Illustration 1, they are saying, what is the relationship between audit evidence and opinion of auditor? Simple. Opinion, audit opinion is dependent on audit evidence. That's all. So look at the solution. There exists a very important relationship between audit evidence and opinion of the auditor while conducting audit of a company. The auditor obtains audit evidence. With the help of that audit evidence obtained, he forms an opinion on the financial statements of that company. Now, I want you to understand and write this in your notes. In any auditing situation, the auditor A obtains audit evidence. B evaluates audit evidence. C forms an audit opinion. D expresses audit opinion to normally the members of the company or to the appointing authority, etc., etc., etc. This is the cycle. Step 1, in any auditing situation, first you need to obtain audit evidence. Without that, you cannot complete the audit. Forget about completing audit. You cannot start the audit also without obtaining audit evidence. When you are starting executing the audit, when you are starting the execution part of the audit, there is planning part, there is execution part, isn't it? So when you start execution, the whole thing, what you do is obtain audit evidence. Pavan sir, I have obtained audit evidence. Shall I close my eyes and accept it? No, there is something called professional skepticism. Here, you need to apply various techniques and procedures to obtain audit evidence. Evaluates, use professional skepticism. Okay, reliability of audit evidence, relevance of audit evidence, quantity of audit evidence, quality of audit evidence. Quantity is known as sufficient, quality is known as appropriate. That is the reason always we use the word whether the audit evidence is sufficient and appropriate. Sufficient, appropriate audit evidence. Sufficiency means the quantity, relevance, sufficiency, and appropriateness. Appropriateness means the quality. All these things we'll see, don't worry. Based on the quality and adequacy of audit evidence, he forms an opinion whether financial statements are showing true and fair view. This is forming an opinion. So it is a process which I am doing, in my brain, whether Ajay's financial statements are showing true and fair view. Then I need to express an audit opinion, which is audit report. Audit report as per SCA 700 or any other statutory requirement. So I will put it in the audit opinion and I will hand it over to the members of the company. This is the process. So the whole story is starting with obtaining audit evidence. The whole process of audit is starting with obtaining audit evidence. So he is telling, if you look at it here, they used two words. Accounting records underlying financial statements. That means some information is coming from financial statements or sometimes other information. Now they are explaining you what is accounting records, what is other information. Accounting records, information from accounting records. The records of initial accounting entries, books of prime entry, vouchers, supporting records such as checks, records of electronic fund transfers. So you have issued checks. That is information. Then you have done some transactions through net banking like IMPS, RTGS. You made some NEFT, net banking payments. Sometimes, taxes are paid online. Now you can open your net banking and pay taxes. You can open your net banking and pay insurance. You can open your net banking and do investments. You can open your net banking and create a fixed deposit. Okay, you can do any type of electronic fund transfers. You can make GST payments. You can make income tax payments. You can make pension payments. You can make salaries, payment towards salaries. You can make payment towards rents. So nowadays, many things are done electronically. So all these records you will obtain. Simple bank statements. Then invoices, contracts entered into. Then the general and subsidiary ledgers, journal entries, other adjustments to financial statements that are not reflected in journal entries. adjustments to financial entries that are not reflected in journal entries. Sometimes there can be some adjustments which are not done through journal entries. Okay, so if it is so, how do we verify that? Then records such as worksheets, spreadsheets supporting cost allocations, computations, reconciliations, disclosures, etc. For example, fixed asset register. If you look at fixed asset register of a company, it is an Excel sheet. In Excel sheet, there will be fixed asset. What is the coding of the fixed asset? What is the location of the fixed asset? What is the quality? What is the quantity? What is the machine made? Which company manufactured it? Which year you bought it? What is the historical cost? What is the accumulated depreciation? What is impairment loss? What is closing balance? All these things will be given in one Excel sheet. So you will verify that Excel sheets also. So this is accounting records. Then what are the other information? Minutes of board of directors, minutes of members, written confirmations from external parties, written confirmation from bankers, written confirmation from investors, written confirmation from investees, written confirmation from the godowns where your stock is lying, written confirmation from your debtors, written confirmation from your creditors, written confirmation from your borrowers, or written confirmation from the lenders. So all these are called external written confirmations. Then manuals containing details of internal control, internal audit manual, internal control manual, accounting manual, payroll processing manual, human resource policies. All these are documents. So if you look at documents listed in category 1, they are accounting records. Documents listed in 2, they are other information. Okay. Now, Pavan sir, how many types of audit evidence can be there? This is quite basic. Okay. This need not even be studied at CA intermediate or CA final level. But as a matter of formality, what they are saying, there are different types of audit evidence. Audit evidence can be visual, audit evidence can be oral, audit evidence can be documentary. This 3 is based on the nature. So depending on the nature, evidence can be classified into visual, oral, documentary. Then based on the source, from where you are generating that audit evidence, based on the source, it can be internal evidence, it can be external evidence. So visual, you are looking at something, for example, physical verification of inventory, physical verification of fixed assets, physical verification of plant. So you are just looking at the process. Visual, this is observation. Visually, you are looking at something and trying to obtain audit evidence. This is 1. 2, oral. You called one employee and you are asking him verbally, orally, hey, where is your factory? He's saying, sir, we have 2 factories, sir. One factory is in Ballari, one factory is in Coimbatore, sir. Okay. Did you purchase any new lands or buildings? Yes, sir. Last year we have purchased one land in Chennai. Okay. So you are asking and getting information orally. Okay, not in writing. Documentary. That means you are verifying some document. It could be fixed deposit receipt, sales invoice. So these are documents. Contract, or when I say that I have this land and buildings, you're asking, Pawan sir, can you give the stamp paper or at least photocopy of stamp paper? Okay. See this document verification. Then depending on the generation source, it can be internal. So internal evidence is the evidence generated within the entity. Internal evidence is the evidence generated within the entity. Can you give me one example? Can anyone give me example of internal evidence? Sales records, stock statements, okay, vouchers written internally, okay, goods received notes. Who's writing goods received note within the entity? Attendance registers. Who's writing attendance internally? Then one example for external evidence. One example for external evidence. Supplier invoice. When you purchased goods, you are getting bill. So who is giving the bill? Externally, supplier is giving the bill. Ajay, excellent. So he is saying confirmation from debtors. Yes, confirmation from debtors. That is received from outsider. So that is external. So they have explained Visual, observing physical verification of inventory, oral, discussion with management or inquiries with client, documentary, fixed deposit certificate, loan agreement, sales bills, etc. Depending on the source, internal evidence, which originates from within the entity, external evidence, which comes from outside the entity. Examples are given. Okay. Now, you tell me, for same transaction or account balance, you have both internal evidence and external evidence. Which one is more reliable? Which evidence is more reliable? You tell me. Do you think internal evidence is more reliable or external evidence is more reliable? So I'm getting the answers that external evidence is more reliable. Excellent. Correct. When you are looking at internal evidence, there is a risk. What is the risk? Management bias. Management bias. So internal evidence can be manipulated. External evidence is more reliable. For example, I'll give you one simple example, okay? One basic example. You asked me, Pavan sir, how many marks you got in CA intermediate audit, Pavan sir, when you have written? I said 78. For example, I said 78. Pavan sir, can you show me some proof? I said, this is my resume. 2007 I have completed and I have prepared one resume in 2011. So old resume I have taken a printout and I gave. So you are like, oh, Pavan sir got 78 in audit. So this is internal evidence. Why Pavan prepared his resume? No, Pavan is orally giving you information, 78 marks. Pavan has printed this resume. He prepared and printed this resume, 78 marks. Now Swati has a doubt. 78 marks are. Pavan sir, can you give me some external evidence? I said, yeah. I can give you printout of my mark sheet sent by ICI. So I have given you original mark sheet given by ICI. In that 78 is there. Now this is external evidence which is more satisfactory. Okay, but what if Pavan said, I got 78 in CA Inter, but in ICI marks memo, he got only 74. So which one you rely? So Pavan said, I got 78. Pavan's CV says he got 78 in audit. But marks memo given by ICI says 74. Now you tell me which is more reliable. You understand what I'm saying? So obviously, whatever is there on the paper, that is more reliable. Similarly, client purchased furniture. So I called the accounts manager and I asked, hey, did you buy furniture this year? Yes, sir. For corporate office, we bought furniture, Pavan, sir. How much is the cost? He said, sir, 5 lakhs. 5 lakhs. I said, okay. So this is orally. Can you give me in writing that you bought, there are additions to fixed assets 5 lakhs. So he said, management representation. I will write a letter to you. Dear Pavan, sir, auditor, dated so and so, confirmation. So management is confirming that yes, we purchased fixed assets and fixed assets are worth 5 lakhs. But when I looked at the supplier invoice, who sold furniture to you, it says 4,82,500. And I opened bank statement, there is a check issued to that supplier, 4,82,500. So now I will not believe what 5 lakhs you told. Maybe generally you told that. Or on paper also you said, Pavan sir, 5 lakhs. You have written an email stating that, Pavan sir, further to our today's morning discussion in cafe, when you asked what is the amount of fixed assets added, furniture added during the year, I said 5 lakhs. You wanted me to tell it in writing. So this is to confirm you. This is to confirm to you that we have added furniture worth rupees 5 lakhs. Thanks and kind regards. Ajay, accounts manager, X Limited. So in writing also I got it. This is also audit evidence. This is also information. But when I open supplier invoice or when I have opened bank statement, that gives exactly the amount of fixed assets you purchased. So one rule of thumb, external evidence is more reliable than internal evidence. This can be MCQ. The answer is yes. Always the statement is true. External evidence is more reliable than internal evidence. Normally, the auditor collates or confirms. collates or confirms evidence obtained from different sources. So what is as per your journal? Okay, what is as per your ledger? What is as per the supplier invoice? What is as per your financial statements? What is as per the confirmation letter? What is as per the bank statement? So I am looking at the same transaction from 4-5 different sources. Normally, the auditor collates or confirms evidence from different sources, and normally these external and internal evidences should agree or confirm with each other. Should agree and confirm with each other. So if you say loan 5 lakhs, in bank statement, loan statement also it should be 5 lakhs, confirmation letter also it should be 5 lakhs. Normally it will agree. In case of disagreement, what it is? So fixed assets purchased, internal evidence 5 lakhs. External evidence 4,82,500. So this is what we say contradictory evidence. There is a contradiction between internal and external evidence. So in this case, the auditor conducts more procedures to check which one is genuine. Rule of thumb is external evidence is more reliable. But you will not go blindly and you will try to, think, will I be able to get evidence through some other source? Source 1 says 5 lakh, source 2 says 4,82,500. Which one could be the better way? Which one could be the better amount? Which one could be the genuine and accurate amount? This is what you think. Okay, now look here. The external evidence is generally considered to be more reliable as they come from third parties who are normally interested in manipulation of accounting information of others. If the manager of State Bank of India is giving that Pavan has this fixed deposit, what is his interest in manipulating accounts? Unless there is a fraud, unless there is a collusion between parties. But normally, bank manager will give correct confirmation only. Why will he? Even if you are Reliance Industries, even if you are Mukesh Ambani, if you ask your bank manager, hey, I have 200 crores in my bank account, can you give me a certificate that I have 250 crores? Even if you are Mukesh Ambani, they'll not give. Because at the end of the day, he will be arrested. So normally, these are not interested in manipulation. Outsiders are not interested in manipulation. That is the reason you bought goods from external party, supplier invoice is reliable. But what if you bought goods from a related party? You bought goods from your subsidiary company, you bought goods from your holding company, you bought goods from an associate company. Then there is a possibility of manipulation because there can be one director in both the companies. And this director is calling the other company board and saying, hey, we purchased goods for 20 crores. Send the invoice for 22 crores. Fraud. Possible. However, if the auditor has reason to doubt the independence of any third party, oh my God, this is what I told you. Independence of the third party. When it is a related party, it is not independent. So, Pavan sir, what to do if invoice comes from a subsidiary company, if invoice comes from an associate, if invoice comes from a holding company, if invoice comes from a company where our directors are interested, then you should exercise more vigilance, be more careful, exercise more professional care, exercise more diligence, exercise more skill, dig deeper, don't close your eyes. As an ordinary rule, the auditor should match internal and external evidence as far as practicable. That is what I told you. Normally, the auditor collates, the auditor tries to compare external and internal evidence. Where external evidence is not readily available to match, the auditor should see as to what extent various internal evidences corroborate one another. So there are various internal evidences. So internal evidence 1, internal evidence 2, are they corroborating? For example, attendance registers of staff and payroll of staff. So imagine there is one employee in my company by name Malati. Okay, for the month of August 2024, the accounting records, the attendance sheets say she attended 22 days and she has taken 3 days leave. So total in 30 days month, there are 5 Sundays or 1 holiday. So take that 6 days off. August contains 31 days, 31 minus 6, 25. So she might have worked for 25 days, but she worked only 22 days. 3 days leave. Okay, now this is one internal evidence. Attendance register is one internal evidence, and payroll is another internal evidence. Who prepared payroll? The company only. So in that, it is mentioned that she attended 24 days. Now, as an auditor, you can question this attendance register says 22 days, but you have made a payment for 24 days. Are you kidding me? Could be a fraud. You're paying more. These are fictitious payments or these are inflated payments. This is how you do that. Illustration 2. Ajay, can you read illustration 2? If you have mic, Ajay, can you read illustration 2?
Sir, I am audible.
Yes.
Audit team member of the auditors of Genuine Limited was of the view that audit evidence obtained internally from within the company under audit are more appropriate for the reliability point of view as compared to audit evidence obtained externally, as
Guys,
evidence
do
obtained
you agree with
internally.
this? Do you agree with this audit team member? One idiot is there in your audit team, and this idiot is saying internal evidence is more reliable than external evidence. Do you agree with him?
Yes, sir.
I want answer. I want you to participate. I want participation, engagement of each and every student. I want all the students to engage and reply in the chat box. One audit team member is saying evidence obtained internally is more reliable than evidence obtained from outsiders. So I rely more on the internal evidence. Do you agree with him? Yes. Swati, correct. So he is wrong. Correct. Continue.
Reliability point of view as compared to audit evidence obtained externally, as evidence obtained internally are obtained from the company whose audit is being conducted. Give
Yes.
your views as auditor of Genuine Limited. The answer,
Continue. Solution.
uh, audit evidence obtained externally is more appropriate from reliability point of view as compared to those which are obtained internally. The reason that audit evidence obtained externally is more appropriate from the point of view of reliability is that there is a very low risk that they can be altered or changed.
So tell me one thing. Can I manipulate the marks memo given by ICI to me? Can I
Yes.
manipulate the marks memo given by ICI to me? Humanly, it is possible. Humanly, it is possible, but that depends on so many things. One, the ethics of the person. So, am I ethically that kind of person who manipulates the marks memo? Am I legally not binding a person? Or what is the probability of this kind of printing a certificate, printing a marks memo, manipulating marks memo? Don't you think it is extremely less probable when I have given my marks memo to you? So I have given my marks memo. I have shown my marks memo original to Swati. Okay, she can have two opinions. Opinion one, oh my God, this is Pavan sir, ethically a good person, or at least seems to be a good person, and given by ICI. Come on. So I will accept it. I will accept it. She can have second alternative also. No, no, no. Looking at his face itself, I feel like this guy is a fraud. No, I will not accept this marks memo. Now you need to understand the difference between auditor and investigator. Now, who are you? Are you an auditor or are you investigator? If you are investigator, take this marks memo, go to Southern Indian Regional Council or go to ICI head office, and then, give this marks memo, in the member section or in the student section, and ask them, hey, I am coming from CBI, I am coming from FBI, or I am a private detective with this authority. So we are digging out a fraud. Can you let me know whether this marks memo is correct or not? So till the time the central council member or some person who's sitting in ICI head office confirms looking at their records, they have opened the record and said, this guy's marks sheet. So they have given a printout from the records of ICI. Now Swati is comparing the marks memo given by Pavan, the marks memo of Pavan given by ICI. Okay, this is investigator. If you are auditor, remember one thing. You can never conduct audit like this. One, there will be legal constraints. Two, there will be cost constraints. Three, there will be time constraints. Four, it is stupidity. Four, it is stupidity. Can you verify each sale transaction like that? Can you verify each purchase transaction like that? No. So auditor in general accepts the information, but uses his experience to check whether the information given is right or wrong. Okay, now for example, I'll give you a simple example. Okay, if I am a patient and if you're a doctor, Swati is a doctor, I'm a patient. Okay, so I went to Swati's clinic and I said, ma'am, these are the symptoms, can you treat me? She asked a basic question, Pavan, are you a vegetarian or a non-vegetarian? I said, ma'am, I'm a vegetarian. Then she asked, Pavan, do you drink? I said, no, ma'am, I do not consume alcohol. She asked, Pavan, do you smoke? I said, no, ma'am, I never smoked. Complete teetotaler, never had any alcohol, and I do not smoke. Do you think she will come behind to do that jasus, to do that investigation, and he keeps on observing Pavan whenever he's going on the road or whenever he's going to a hotel, what he is eating, is he smoking or no? Will she do that investigation? No. No, she accepts, okay, you're a vegetarian, okay. You are a teetotaler, you do not booze, okay. So you do not smoke, okay. So she believes that she is not required to investigate. Same thing with auditor. I don't need to investigate, but if Swati is a doctor with 20 years of experience, looking at the face of the patient and the records, whatever she has in her hand, looking at the lab reports, looking at the face, she says, are you kidding me right now, idiot? You are a chain smoker and you are saying you do not smoke. Do you think I'm an idiot? Do you think I do not know what will be the shape of your lungs or what will be the situation of your lungs or your liver when you drink and when you do not drink, when you smoke and when you do not smoke? Come on, bro. To whom you are lying? This is what we call diligence, care, experience, judgment. Auditor exercises these things, but auditor never investigates. Auditor never investigates. Okay, Pavan sir, I understand everything, whatever you told. How do I verify the relevance, reliability, sufficiency, and appropriateness? These four items, what is these four subheadings, what is the meaning of that, and how do I verify that? Okay, let us see. Let us see. Relevance and reliability, very important. Look here. The auditor has to express opinion on the truth and fairness of financial statements. Okay. He shall consider relevance and reliability of information to be used as audit evidence. Okay. Already I told you. The quality of the audit evidence is affected by the relevance and reliability. Hey, look here. Audit evidence. Put the heading. From this 2 arrow marks down. Audit evidence from this 2 arrow marks down. Okay, from this 2 arrow marks down. Sufficient, appropriate. Sufficient, appropriate. Okay, sufficiency is the quantity, appropriateness is the quality. Now, this quality of audit evidence again has two things: relevance, reliability. Okay, we will write something under sufficient also. We will come back. Okay, now we are speaking about relevance and reliability. Now read this. The quality of audit evidence is affected by relevance and reliability. Now let us understand what is relevance, what is reliability. Relevance deals with logical connection with or bearing upon the purpose of audit procedure and where appropriate, the assertion under consideration. Oh my gosh. So here, purpose of audit procedure, underline. Purpose of audit procedure, underline. Assertion under consideration, underline. Purpose of audit procedure, assertion under consideration. Okay, now I'll give you one example. Fixed assets, 1 crore. Building, fixed assets. What is this fixed asset? Building. Fixed asset building 1 crore. Now, what is the audit assertion under consideration? Whether the asset is overvalued or undervalued or properly valued. This is the question. So auditor in his mind, he is trying to check the valuation. So I want to verify the valuation of this house. Now, what did I do? Technique. What is the audit procedure applied? What is the audit procedure applied? You have applied physical verification of fixed asset. You have applied physical verification of fixed asset. So you asked the owner of the building or your client, hey, where this property is located? He said, ma'am, we have this in Chennai. Okay, in Chennai where? Ma'am, you know that ICI chapter, no? Nungambakam, 122 Mahatma Gandhi Road. Yeah, I know. It is diagonally opposite to that, ma'am. Or, go little forward. That Gemini flyover is there in Chennai. So it is located there. That AVM studio is there, na? Next building, ma'am. Okay. Ma'am, that building is, painted in so-and-so color. It is a 2-storied building or it is a 1-storied building. Okay. Or it is a flat in so-and-so apartment. Okay. So you went to the apartment. You entered the apartment. In the ground floor, there is a list of flat numbers and owners. So there, flat number 504, Pavan said it is flat 504. Okay, 504. Opposite to that, oh, Pavan Kumar. Okay. So this is owned by Pavan. Then you went to that Gurkha or the watchman and you asked, hey, this 504 flat is there, no? To whom this belongs to? Ma'am, it belongs to some person. His name is Pavan. Okay. So he lives here. Yeah, he lives here. Or do you think it is rented out? No, it is not rented out. He lives here only. He has any car? Yes. Where it is? Ma'am, you see that red color car? That is his car. Where he works? Ma'am, he is a manager in ICICI Bank. So you got some information. Okay. Now you are happy. This flat belongs to Pavan. This flat belongs to my client. So are you happy? Idiot you are. Are you nuts or you're an auditor? Use brain. You want to verify the value and you're doing physical verification. Darling, remember, physical verification satisfies existence assertion. Whether the asset is existing. Pavan sir, I checked physically, it is existing. Yes. That red color car is existing. But what is the value of the car? 7,22,825 rupees. That is what financial statement says. How will you verify that, red car is valued so-and-so, looking physically the car? So what you are doing and what you want are contradicting. What you want, valuation, whether the asset is valued properly. So assertion is valuation here. What is the procedure? Physical verification. This is not matching. So the evidence obtained through physical verification is not relevant for valuation assertion. Now you understand what is the meaning of relevance? So what is the purpose of audit procedure? What is the objective? What is the assertion? What technique I am using? Is it relevant or no? Is it relevant or no? Okay, now you are verifying provision for non-moving and slow-moving goods of inventory. What is that you are verifying? You are verifying provision for slow-moving stock, provision for non-moving stock, provision for obsolescence in inventory, provision for inventory which is useless. Okay, how can you verify that? Looking at the stores ledger. When you look at the stores ledger, it gives you valuation, whether FIFO is applied correctly, whether weighted average method is applied correctly. So you can verify that using the stock register. Priced stores ledger. But how can you verify provision? To verify provision, you need to go physically and you need to see the goods. Damaged assets, damaged inventory, obsolete inventory, inventory which is not useful, inventory which has a very low turnover. You need to verify that in the store. This is what we call relevance. So again, come back. It depends on a logical connection. Logical connection. What is the procedure? Whether the assertion is achieved. What is the procedure? What is the audit procedure? Assertion. Is there any logical link? The relevance of information used as audit evidence may be affected by direction of testing. Direction of testing. We'll discuss about testing also in some time. The reliability of information. So we completed relevance. Reliability. Reliability is influenced by source, nature, circumstances, controls. Reliability, one, source. Two, one, source. Two, nature. Three, circumstances. Four, controls. So reliability, whether audit evidence is reliable, that depends on so many things. Now, about reliability, I will give you golden rules. There are four golden rules. One, external evidence is more reliable than internal evidence. Two, written evidence is more reliable than oral evidence. Three, internal evidence is reliable if the internal controls are strong. Four, evidence obtained by auditor directly is more reliable than evidence submitted by management. I got something directly from the third party. That is more reliable. Written evidence is always reliable than oral evidence. External evidence is always reliable than internal. These are called four golden rules of reliability. So that's it. So we have discussed about relevance, reliability. Okay, now they have explained with examples. They have explained with examples. Okay, this is what even we have discussed, relevance, reliability. Okay, now, before we go to the next topic, let us understand these two things. Tests of controls, substantive procedures. I'll give you 60 seconds of time, 1 minute time for all of you to read these two paragraphs. Read these two paragraphs. Pavan sir, what all these things are? I'll show you something. Then we'll come back and we'll discuss about that in a while. Now, look here. Reliability of audit evidence. This is what I have explained just now. Reliability of audit evidence. Now, see this, what they are saying. Reliability of audit evidence increases when it is obtained from independent sources, third source. When related controls are strong, evidence is more reliable. If it is obtained directly by the auditor, it is more reliable. If it is obtained in written form, documentary form, it is more reliable. Evidence available in original document, original form is more reliable. So these are the 5 things I told you. If you want, you can add, Pavan sir, you told 4, add 5 also. Evidence available in original form is more reliable than photocopy or duplicate. Obviously. So I'm giving you stamp paper, original stamp paper, that is more reliable than a photocopy. Okay, so this is reliability. Now, sufficient, appropriate, again, we'll come back to this. What is sufficiency? What is appropriateness? But before that, I wanted to show you one chart. Okay, we'll see the chart and then we'll move further. So ICI has given one chart somewhere in the middle, this one. Oh, audit procedures. There are two types of audit procedures, risk assessment procedures and other procedures. Risk assessment procedures and other procedures. RAP, R-A-P, RAP, SCA 300 series, 300, 315, that consists of what are risk assessment procedures. Two, other procedures. These are also known as FAP, further audit procedures. So these other procedures are again of two types. Tests of control, substantive procedures. Now you understand, I have shown you something on the screen. What is tests of controls? What is substantive procedures? And then we jump to this chart. So substantive procedures are again of two types. Tests of details, analytical procedures. What is the meaning of tests of details? Tests of details, again, there are of two types. These are tests of transactions, which is called vouching, tests of balances, which is called verification. So we'll discuss all these things. But I want you to copy this in your notes now. I want you to copy this in your notes. So once you are done copying this in the chat box, please let me know DONE, done. So after that, we'll take a short break and then we'll come back.